So good evening everyone. Greetings from DG School of Excellence. This is CA Deepika Ganesan, Chartered Accountant, Faculty for Indirect Taxation for CA, CMA and CS students. So welcome you all for the next session on GST. So last session we learned what is intrastate supply. So under nature of supply we have two types. One is intrastate supply, another one is interstate supply. So we have already learned what is intrastate supply under section 8 of IGST Act. So today let us learn what is interstate supply. So the term interstate supply is defined under section 7 of IGST Act. Section 7 of IGST Act. Now to determine whether it is intrastate or interstate. So the two terminologies. One is the location of supplier and other one is place of supply. So these are the factors, these two are the factors which determine whether it is intrastate supply or it is interstate supply. So only when you have the information of these two, then you can determine whether it is interstate or intrastate. You can fix the nature of supply. So let us move on. Under section 7 subsection 1. Section 7 subsection 1 of IGST Act. So this is speaking about interstate supply of goods. And section 7 subsection 3, it talks about interstate supply of services. Okay. Now, so to determine, so section 7 subsection 3, to determine whether it is interstate supply of goods and interstate supply of services, so we should know these two factors. One is location of supplier, another one is place of supply. And place of supply is governed by section 10 for goods, and in case of services it is section 12. It is section 12. Okay, having known this, so when it is said to be an interstate supply, when the location of supplier and place of supply are in two different states, they are in two different states, then they are said to be interstate supply. Second, two different union territories, then it is said to be an interstate supply. Next, third one is one state and one union territory. So in case the location of supplier and the place of supplier are in one state and one union territory, then they are said to be supply in the course of interstate trade. Now we'll see an example. Say for example, location of the supplier and say place of supply. Say location of supplier is Tamil Nadu and place of supply is also Tamil Nadu. Then it is treated as intrastate because both are in same state, so it is intrastate. Now suppose location of supplier is Tamil Nadu and place of supply is Kerala, then it is interstate. It is interstate because they are in two different states. Now suppose the location of supplier is Chandigarh. So Chandigarh is a union territory and place of supply say it is Punjab. So again it is one state and one union territory, and therefore it is interstate. It is interstate supply. Location of supplier is say Chandigarh and say place of supply is Lakshadweep. So in that case, so it is two different union territories. Then it is interstate. So we have seen an example, that is two different states, Tamil Nadu, Kerala, interstate. one state and one union territory. So Punjab is a state, Chandigarh is a union territory, so it is interstate supply. And two different union territories, it is interstate supply. So section 7 subsection 1 and section 7 subsection 3 talks about this interstate supply, and section 7 subsection 1 is for interstate supply of goods. Section 7 subsection 3 is of interstate supply of services. So for goods you have to determine the place of supply based on section 10 of IGST Act. For services it is based on section 12 of IGST Act. So that is the difference. Now let us move on to section 7 subsection 2. So what is this section 7 subsection 2? It talks about import of goods. It talks about import of goods into the territory of India till they cross the customs frontier. Till they cross the customs frontier. So what does this mean? Now you import any goods from outside India, say from US. Say from US you import a goods. You are in India. So you import goods from outside India. Now the goods are coming to India. So up to 200 nautical miles, it is said to be the customs frontier. It is said to be the customs frontier. So the goods are coming from US and they haven't crossed the customs frontier. So that means still they are outside India. They are in high sea. So when they are in high sea, say they get an order from a customer in India. Say in Tamil Nadu itself, and the goods are also going to come to Tamil Nadu. But still, they got an order during the high sea. So during the high sea, they got an order. So in that case, it will not be treated as intrastate. It will be still treated as interstate supply because the goods have not reached India. They have not touched the customs frontier. So any import of goods into the territory of India till they cross the customs frontier and you get an order during that high sea, it will be treated as interstate and not intrastate. So this is an interstate supply of goods. It is an interstate supply of goods. Now, section 7, subsection 4. So this deals with import of services into the territory of India. Import of services into the territory of India. So what is this import of services? Say you receive some customer support service from US. So in this case, it is import of service. So when it is said to be an import of service, the definition, import of service. So what it says, it is, say the supplier is outside India. Recipient is in India. And place of supply is in India. Then when all these three conditions are satisfied, it is said to be import of service. So supplier is located outside India, recipient is located in India, and the place of supply is in India. Then it is said to be import of service. So say for example A Limited from India receives some business support service from US, then it is import of services. So import of services is said to be an interstate supply of service, and you have to pay tax, GST, that is GST under reverse charge mechanism. So this is a notified service under section 5 subsection 3 of IGST Act. So this is a notified service under section 5 subsection 3 of IGST Act. Import of service is a notified service under reverse charge mechanism. So you have to pay tax under reverse charge mechanism. That means the recipient in India will have to pay tax under reverse charge mechanism. So this is interstate supply of service. Now let us move on to section 7 subsection 5. In this case, say supply of goods or services or both. supply of goods or services or both. So first, under that first point, supplier where supplier is in India, and place of supply is outside India. Place of supply is outside India. So we'll take an example for this. So let us take an example. Say for example, A Limited is in India, and say B Limited is in, say, US, and they also have a branch in Mumbai. That is India. No, say this A Limited, say it is in Tamil Nadu, Chennai. Now what happens is, see, this B Limited has ordered for some goods. They have ordered for some goods from A Limited, Tamil Nadu, India. And they clearly give an instruction stating that the goods should reach their branch office in Mumbai. The goods should reach their branch office in Mumbai. But the billing should be made to B Limited. So what will happen? Bill will go to B Limited US, and it is shipped to Mumbai, India. So both are belong to same company only, B Limited, but it is billed to US and shipped to India. Bill to ship to. So this is a bill to ship to concept under section 10, subsection 1, clause D of IGST Act, which is talking about place of supply for goods. And they say if it is exempt for export and import, this section 10 will apply. Now whether this is export, when it will be treated as export of goods, only when the goods are moving outside India. So export of goods definition, what it says, taking out of India to a place outside India, taking goods out of India to a place outside India. Whereas here, in this case, the goods are not moving outside India. Definitely it's not moving outside India. Goods are moving within India only. Goods are moving within India. So it is not an export. So very well we can apply section 10, subsection 1, clause B. So what it says, in case if it is billed to ship to, so bill to one party and ship to another party, then the billed party's location will be taken as place of supply. So billed party's location, here it is US. So the place of supply is outside India, but still it is not an export, so it is not zero rated. So in this case, it is an interstate supply. Though the place of supply is outside India, it is not an export, it's not zero rated, and it will be treated as an interstate supply. So in this case, supplier is in India and place of supply is outside India, and it is also not an export. So billed party's location is the place of supply, so which is US. It will be treated as an interstate supply. Next is supply of goods or services or both to or by SEZ. So whenever you make any supply of goods or services to SEZ, it is zero rated. So zero rated, again you have two options. One is you apply for LUT and don't pay any IGST, and you can get refund of your unutilized input tax credit. Second option, you pay IGST and get refund of IGST paid. So this is the options available for zero rated. So whenever you make a supply of goods or services to an SEZ, special economic zone, it is zero rated because it is considered as a place outside India for tax purposes. So for tax purposes, it's considered as a place outside India, and therefore it is treated on par with export. And hence it is zero rated. Next, supply of goods or services by an SEZ. So some SEZ to DTA. Say for example, Tamaram MEPS to Nungambakam. So both are in the same state, Tamil Nadu only. But still, it will not be intra-state supply. Why? Because SEZ is considered as a place outside India for tax purposes. It's more like an import. Whenever you receive any goods or services from SEZ, it's more like an import. And therefore, it is interstate supply and not intrastate supply. Third one, supply of goods or services or both in the taxable territory. territory, not being an intrastate supply, and not covered elsewhere in this section. So it's not covered elsewhere in this section 7. And the supply of goods or services are being made in the taxable territory. Taxable territory means India, and it's not an intrastate supply. It's not an intrastate supply. So then it will be considered as an interstate supply. So supply of services, goods or services are both, where supplier is in India and the place of supply is located outside India, then it is interstate supply. Point number 2, supply of goods or services are both to an SEZ is a zero rated supply. By an SEZ, it is interstate supply. Supply of goods or services are both in the taxable territory, that is India, and it is not being an intrastate supply, and it is not covered elsewhere in this section, that is section 7. So if it is not covered elsewhere in this section, then it will be treated as interstate supply. So let us summarize what is interstate supply. So why this is very, very important, only then you can fix the nature of supply. So why fixing the nature of supply is important, only then you will know which tax to pay. If it is intrastate, you will pay CGST plus SGST or UTGST. If it is interstate supply, you will be paying IGST. So to fix the tax, you have to know the nature of supply. To fix the nature of supply, you have to know these two. One is location of supplier and another one is place of supply. The term location of supplier will be dealing with that in the next session. Now, let us summarize. We have 5 subsections under section 7. Section 7 of IGST Act deals with interstate supply. So 5 subsections. So let us summarize all those. Section 7, subsection 1, interstate supply of goods. 7, subsection 3, interstate supply of services. So place of supply for goods is dealt with in section 10 of IGST Act. For services, section 12 of IGST Act. So location of supplier and place of supply are in 2 different states, are in 2 different union territories, or they are in 2, that is 1 state and 1 union territory, then it is termed as interstate supply. And section 7 subsection 1 means for goods, 7 subsection 3 for services. Suppose, so we saw an example for that. 7 subsection 2 is talking about import of goods into the territory of India. So when they come to the territory of India, till they cross the customs frontier, it is treated as interstate supply of goods. 7 subsection 4, import of services into the territory of India is treated as interstate supply of service, and you have to pay tax under reverse charge mechanism as it is a notified service under section 5 subsection 3 of IGST Act. And the last subsection is supply of goods or services are both, where the supplier is in India but the place of supply is outside India, then it is treated as interstate supply. Point number 2, when supply of goods or services are both is made to an SEZ, then it is zero rated. If it is made by an SEZ, then interstate supply. Supply of goods or services are both in the taxable territory, that is India, and it is not an intrastate supply, and it is also not covered elsewhere in this section, that is section 7. Then it is treated as supply of goods or services in the course of interstate trade. So thank you everyone. So today we have completed the session on interstate supply. Next session we will deal with what is location of supplier. So thank you so much. Signing off. CA Deepika Ganesan, Chartered Accountant, DG School of Excellence. Thank you.